A few years ago, Ontario developed social impact bonds, or SIBs for short. What are they, you may ask, and what do they have to offer? Well, tonight, right after this program, TVO will air the world broadcast premiere of The Invisible Heart. That's a documentary that looks into all of that. And here to help us understand better, Andrea Robertson, Vice President, Not-for-Profit Services at TD Wealth. Ricardo Tranjan, Senior Researcher at the Canadian Centre for Policy Alternatives. Brian Milner, freelance business and economics writer and contributor to the Globe and Mail. And Nadine Pequeneza, the filmmaker and director of the documentary The Invisible Heart. And we are delighted to welcome everybody to TVO. And Nadine, I want to spend actually the first part of our conversation with you, just to set up the documentary. But why don't we give a little sneak preview of what you've got up for us at 9 and midnight tonight, okay? Sure. Mr. Director, if you would.
I really think you're going to start to see a building movement. Could be as big as the New York Stock Exchange, meaning it's as important as the creation of new capital markets. My real interest is social impact bonds as they apply to early childhood, because of all the arenas that you can apply social impact bonds to, there is the greatest potential return for society as well as for investors in early childhood.
That guy must love you now, because on the strength of you featuring him in your documentary, he's now the governor of Illinois, right?
I'm not sure if the documentary did it, but he is the governor of Illinois, yes.
Very good. Let's peel away the layers of the onion here and see if we can figure this out. Social impact bonds basically are what?
In their simplest form, social impact bonds is a way for private investors to fund a social program. And then if the social program delivers certain results that are set by government, the government repays the investor plus a return on their investment. And investment returns have ranged between 8 and 12%, generally globally. And it can be used for programs like homelessness or prison recidivism, reducing those numbers, reducing the number of kids going into foster care. Those are the areas that they've been experimented with in 27 countries now.
Why would investors want to put money into something that, what would you say the returns were, 8 to 12 or something like that, if they think they can get 20 or 30 somewhere else?
Well, 8 to 12 is a pretty good return, especially when you start to consider the risk that is associated with these programs. So a lot of the programs that have gone forward are proven programs that have been tested by studies, multi-generational studies sometimes, publicly funded studies, control groups. So there's a fairly good chance they're going to get their money back with a return. But aside from whether they get the money or not, the people who are attracted to these kinds of investments are socially responsible investors. So people who want to see both a social and a financial return from the money, or their capital that they're putting forward.
So these are people who are not just interested in rapacious capitalism, they actually want to invest in seeing Johnny and Janie learn how to read better, that kind of thing.
Yes, they have that interest, yes.
And you, having done the documentary on this, you are convinced that the people who are the money behind these social impact bonds really do care at the end of the day about those things?
I think the majority do. I think the vast majority, yeah.
Where did you come to this topic in the first place? This is a rather arcane subject to make a documentary about.
It is a bit outside. I saw actually a TED Talk is how I first learned about them. But my interest came from having done many social issue documentaries. So a lot of times I'm following people with a camera over several years that are involved with the child welfare system or with the prison system, youth getting into trouble, dropping out of school, homelessness. And I saw that the people that I was filming, often they were getting help so late in the game and so little that the amount of trauma that they'd already experienced, it was so difficult to try and help them to recover. And dealing with frontline workers, they know very clearly that the help has to come earlier on. And so social impact bonds, the way they were originally conceived is that they would be early intervention programs. And I thought that if they could be used to demonstrate to the public that there was both a social and a financial return to getting involved early, that it would give government the ammunition they needed to shift policy in that way and start to invest directly in those types of programs.
I suspect many people watching us now will remember Adam Smith's Invisible Hand. Your documentary is The Invisible Heart. Tell us why you called it that.
It is a play on Adam Smith, and the idea is that people's conscience is supposed to play a role in determining where capital is invested and how the markets operate.
Okay, having set the table with that, we're now going to bring everybody else into the conversation here. But actually, just before we get you in, we always need to set things up. And to do that, we want to get, well, friendly viewers, we're going to send you all back for Economics 101 here. You ready? Ready to go back to school for a second? Here is a little primer on what bonds are. Not James Bond, but other bonds. Roll it, please. What is a bond? Well, a bond is basically an agreement to repay borrowed money within a certain amount of time with interest. There are a few types of bonds, but for the purpose of our discussion, we're going to focus on government bonds. Governments issue bonds in order to raise money. Let's say a government wants to raise $500 million. They could issue 500,000 $1,000 bonds. Each bond has a maturity date, which is when the issuer of the bond has to repay the full amount of the bond plus interest. The maturity date of a bond can range from 1 to 30 years. If you bought a $1,000 bond from the Government of Ontario today and it had a 10-year maturity date, in 2029 you'd get your initial $1,000 back plus interest. The interest rate today is 2.2%, so in 10 years you'd get a total of $1,220. Is this a good way to invest $1,000? Well, that depends on your appetite for risk. Ontario government bonds are very low-risk investments because your payout is virtually guaranteed. The Government of Ontario is very unlikely to go bankrupt and not pay you back. If your appetite for risk is higher, you can put your money somewhere else where the return might be much better, like in the stock market or corporate bonds of various risk levels. Okay, there's our Economics 101 on bonds. And Brian, let me get you to start us off here. We're going to talk about social impact bonds, and we talked there just about regular old-fashioned bonds. How do these two things differ, if at all?
Well, the concept is identical. The outcomes are different, and the measurement of how they work is quite different. Normally, people who buy bonds and institutions love bonds because they're stable, they're relatively safe, and they balance out the risks you might have in other investments like equities or real estate or private investments. So bonds play a crucial role in the capital markets. They're far, far bigger than the equity markets, way, way bigger. They're the most important way of raising money around the world. And the fact is, most people who get into bonds are not there to take a lot of risk. They're there to protect themselves. And the more risk you take on, the more the issuer is going to have to pay you. But, I've looked at quite risky bonds over the last few days to try to compare them to the examples in the documentary where Pritzker talks about how 8% is a decent return. Well, 8% is an incredible return in a low interest rate environment like this one. The city of Detroit, which went completely bankrupt in 2014, has just come back to the municipal bond market just a month ago. And if you buy a municipal bond from the city of Detroit, you're only getting about 4.1% interest. And this is a city that has a terrible credit rating. The city of Chicago's own education department issues bonds. You can get bonds to help the education department build schools and still get less than 5% return. So if you're getting 8, that's equivalent to investing in a third world government.
Andrew, in which case, let me ask you, the markets, do they like social impact bonds?
So social impact bonds are not publicly traded. So that's another difference between the bonds that Brian was talking about and these bonds that we're going to talk about today. They're a private transaction. They're a private, I personally don't like that they're called bonds because it's confusing, because most people think of bonds as something that's safe and has a guaranteed return and can be traded typically publicly on the market and actually protects your portfolio. This is more of a social finance transaction, in my opinion.
Okay, and the people who put forward the money in the hopes of getting this 8% return or whatever, so far, I mean, this is a relatively new financial instrument, but so far, do they seem to like them?
So
Are they popular?
So I wouldn't say they're popular because they're not widespread, but the people who invest in it are interested in several things. They're interested in perhaps making a financial return, but they're interested particularly in social good because this is a risky transaction in many ways. There are several elements of risk that you don't find in normal bonds. Typically, you have to be what we call an accredited investor, which means you have to have at least a minimum of $1 million in investable assets in order to invest in these things. Usually, the transaction is pretty high. A minimum transaction is high. So you have to have a ton of money to be able to do that. So it's not for the normal investor.
Not for the small investor, not for the
No.
faint of heart.
No, and it's also typically long term, so you're not going to get your money back. So if you have liquidity issues or whatever, you don't want them either.
Gotcha. Ricardo, what's your view on SIBs, social impact bonds?
One of the things that I really appreciate in Nadine's film is that it brings the perspective of the social service, the frontline workers, right? And that's a perspective that is really important in this subject and one that doesn't get enough attention. So in my previous role, I spent a lot of time with people who manage and deliver social services, and they're talking about wraparound services. They're talking about human service integration. They're talking about continuity of care at a systems level. Essentially, this notion that a coordinated, if possible, integrated, sustained intervention. That's what we need. That's what we should all be collectively trying to reach. And it strikes me that social impact bonds takes us on the opposite directions. It's this one-off, in and out intervention, check the box, cash the money, and then they're out of the door. And then what happens to the people, to the families, to those communities? So my impression is that it's not a very ethical, responsible way of going about delivering social services.
Nadine, your documentary didn't at the end of the day, I shouldn't give away the ending here, but I will a little bit here. You don't, this is not a polemical documentary. You don't take a position on these things. You show the upside, you show the downside. We've heard some of the upside. Ricardo's told us some of the downside. At the end of the day, did you yourself come to any conclusion about whether these things were more positive than negative or vice versa?
I think they're moving from theory to reality. I don't think they're delivering on a lot of the promises that they set out to do in 2014. So when I started the film, so they were saying they were going to innovate social programs, they were going to bring new money to the delivery of social programs, and they were going to be results focused, so we would get better outcomes for people. And I don't think the bonds that I've seen and looked at, and not just the ones in the film, but I do a lot of research outside of that, have not delivered on those things. And I think what it tends to do is undermine democracy, because the people who are making decisions about what gets funded and how programs are designed tend to be the investors. They have a lot of say in that. I know people who are proponents of social impact bonds say that it's government that's setting the agenda and setting what the metrics, the success metrics are, but in the film, it was quite clear that the investors have an influence in that.
Give us an example of a social impact bond that you think did well. Everybody did well. The investors got a profit, and the people who were at the center of the bond, they had their circumstances improved.
Okay, so one of the bonds that I did look at, and it was reviewed actually by Mildred Warner, who's in the film, she did a comparison actually of the Chicago bond, the Utah one, both were early childhood development, and then the one in South Carolina, which was a family nurse partnerships program. And again, it had been running for several years, but some philanthropic investors got in. The government also invested themselves. And the idea, so that what happens, it's to improve maternal and early childhood health. So you have a nurse that will go around and visit families who are in low-income areas to give them assistance to make sure that they improve those outcomes. And the idea at the start, at the outset, was that they would fund this program, they would show the good results, and then there was even an advocacy budget built in to get that program funded through Medicaid. So that's the best design I've seen. I still don't know what the outcome of that is because they're not finished yet, but, and that was how I originally saw these potentially working. But I would say that's the best example I've seen.
Okay, does that work for you, that example?
So that sounds like a good example. We've seen examples where it doesn't work. For example, the Rikers Island anti-recidivism program, that didn't work. Actually, the intervention didn't work, and so
Didn't work, meaning the inmates
so the inmates
reoffended?
did reoffend.
So people lost their money?
People lost their money, yeah. So people meaning Goldman Sachs and Bloomberg Philanthropy. So, but it didn't stop Goldman from going on and funding others. I believe they funded the Utah social impact bond as well. What I think actually is, if I look at it from a high-level perspective, I think that we have many challenges both in Ontario and globally, and that philanthropy and government can't hope to solve them all. We need private capital, which is larger than, which is going to add a huge piece to it to help solve many of our problems. If this is one way to attempt to do it, I think it's a great way to try to engage the private sector. And it is the private sector, so we have to offer incentives.
Ricardo, I need you to speak to that, because governments everywhere are complaining that they don't have enough money to do the things in social programs that the citizens want them to do, and this is obviously an idea to get some private money into helping that happen.
So the first question there is it really private capital if you're getting it back with a high return on it? So governments, they have a lot of different instruments they can use to raise the revenues. The governments that we have today are choosing not to do that. So they might choose to fund social interventions through borrowing. And if they do so, they can get money at a much lower interest rate. As we have been explained to us, bonds, the actual bonds, it's one way for governments to go out and then finance social programs and other government programs with below market interest rates.
But this is one way to get that money without it showing up on the government's books. They don't have to go into deficit.
But eventually it does show up because somebody has to pay back the investors.
Yeah.
So the
but
thing
that's a problem for somebody else down the road,
well, they're
right?
deferring the payment.
Precisely.
Basically.
Okay, but that's the point. It keeps the money off the government's books today, and governments get elected today,
well,
not 10 years from now.
There is a ton of interest in social, environmental bonds. I can tell you a number that's staggering. There are now $12 trillion parked in funds that invest in socially responsible and environmentally responsible bond issues. That's an enormous amount, and that's only in the last decade it's grown to $12 trillion. But most of that investment is not going into innovative things because innovation implies high risk. It's going into the safest possible things that governments could easily finance on their own, and it's not going to parts of the world that need it the most. You're not going to go into an African country that has a lousy record of governance, terrible corruption, to eradicate poverty with these social impact bonds. You're just not going to do it. You're going to put them in wealthy countries that already have the right infrastructure, the right governance, the right oversight, and then you're going to cherry pick what you think you can market to your investors, and that's how it's working.
I also just wanted to say that it does stay on the government books, actually, because they do potentially have to pay it, so that money is set aside.
So they do have to budget for it today.
Yes.
The budget, the money that they're going to have to pay back to investors in 10 or 20 years.
And in fact, when Goldman Sachs negotiates these deals, because appropriation is usually done on an annual basis, there's a lot of different ways that they've tried to mitigate that risk. But in Massachusetts is the other SIB that they funded, was the most expensive one at the time, $27 million. And they passed legislation making Massachusetts the state responsible for paying back that bond.
But presumably the whole big nut, like the original nut plus the 8%, that's something that doesn't have to be paid off until the bond is due, right?
Until the dates where the triggers are met, but that money still has to be accounted for.
Okay.
So I think it's more of a political advantage for governments to look at SIBs. I think that's why they're interested in social impact bonds. It's a good news story. We're doing something about this problem. Look, we're involving the private sector. We're all working together. I think it's more of that than a financial gain.
How do, in your experience with your clients, how do they measure the risk versus reward and the ethical considerations and whether the money ought not to be put somewhere else? And how do they make their decisions at the end of the day?
So clearly it varies across individuals. That kind of decision is highly individualized, but there are more and more, to your point, investors who are interested in making an impact with their investments. Now, I mainly deal with the nonprofit sector. So think about a nonprofit that is required to grant out 3.5, a charity that's required to grant out 3.5% every year. Well, what happens to the rest of it? Is that just sitting there in the public markets? Maybe in, companies that aren't the greatest in terms of their environmental, social, and governance record? Or do charities start to look at their portfolios as well and think about, well, how can I have an impact, sometimes aligned with missions, sometimes not, that actually will benefit our society and our world? So it depends on the organization, just as it depends on the individual, but there's more and more movement towards thinking about investments in an impact framework.
If, Ricardo, the money has to be budgeted and set aside year by year as they go along, and if governments can borrow the money for less expenditure than they will have to pay off to investors at the end of the day, why are they doing it?
I think governments that are not interested in funding long-term programs, who are not interested in building the social infrastructure that communities need to thrive, they might find social impact bonds very interesting because it's a small, very, sort of direct, one-off intervention. It's not great use of money, but they're relatively cheap because they're so narrowly scoped. And then in the end of the day, they get some nice statistics to run with. We dropped this by 10%, we increased that by 30%. So it has some political expediency in that way. Now, a government that comes into power and has committed to extend early childhood for all children, who committed to put in place a universal pharmacare program. These governments, I doubt they will be interested. They're going to see this as a ripoff. It's more costly than it needs to be. A lot of the money gets spent on management firms and consulting middlemen of all sorts of kinds, and it doesn't have any lasting impact. I think they will probably find that investing in the conventional public services, it's a much better value for money.
Nadine, you've got to explain something to me here. The previous Ontario Liberal government, which many people accused of running up big deficits and spending too much money, went for a couple of social impact bonds, right? They got involved in a couple of social impact bonds. The new progressive conservative government, which is supposed to be friendlier to the private sector, which is trying to tighten government expenditures, just canceled them. Can you explain that to me?
Well, I think our current premier is canceling everything, cutting costs wherever he possibly can. So I don't think it's necessarily an ideological view on social impact bonds or not. I think he just saw it as something that he could cut. It was a new program that hadn't been implemented yet. So.
Okay. Yeah. So it started under the Liberals, and the Conservatives just pulled the plug on it before it got too far down the road.
Yeah. In Canada, both Liberal and Conservative governments have experimented with social impact bonds. The NDP has not touched them to date. But, and you'll see that in the States too, it's Republicans and Democrats. It really cuts across ideological lines because I think people see them as different things and have different hopes for them. And the way they're designed and implemented can create very different outcomes. But to what Ricardo was saying, it's true, there's 134 impact bonds now. And
134 where?
Around the world,
everywhere.
In 27 countries. And the majority serve less than 522 people. And the bonds that complete, and there are a number of them now, including one in Canada, they are not taken, when they have successful results, government doesn't take them over and implement them as a province-wide or country-wide program, even though they've been proven successful. And to the point that we started speaking about, these programs are not innovative. Early childhood education is not innovative. The program in Chicago has been studied by the University of Minnesota since 1985. You know, the program that was being developed here by Mainstay Housing was based on at-home chez soi study, which was completed in 2014 in Canada. 5 different cities, 2,000 participants, and proved quite clearly that giving people access to affordable housing and access to community supports ends homelessness. So we already know what to do. So it's the idea of piloting innovative programs and paying 8% return for a risky investment, it's not borne out in what we've seen.
You want to respond to that, Andrew?
Yeah, so when we were speaking before we came on, you said what attracted you to it was that the first social impact bond in England really addressed an unserved group. So I could see, and that was very convincing. And it is true that we have a lot of research on early education. The problem is a lot of these things aren't funded. Best case scenario, the government would fund it, but if they're not, if they don't have the money to fund it, this is private capital funding these things. And I just wanted to point out that people don't get paid if it's not successful. And how do we measure success? I agree that that's complex. It's not simple. Simply spoken, you measure success by every time somebody who starts in the preschooler program graduates and goes to university, we've saved all sorts of costs in special education, maybe, incarceration,
Yep.
et cetera, things like that. So there are very intelligent statisticians out there who actually compile that information to figure out how much government would be saved, and it's predicated on that. Whether those are legitimate numbers or not, I can't really speak to. But the point is that we do see examples. You would probably know more than I do. I think of that Rikers example where actually it must have been risky because they lost all their money. So I don't see it as we're paying, fat cat investors big money to do something that's a slam dunk. It's not a slam dunk. It's extremely risky, which is why it's 8% and not 2.2%, which is more of the riskless rate.
Well, the Rikers one was actually up to 22%, and they didn't lose their money. They shut down the program because they weren't getting the results. So the person, the organization, the investor that lost most of the money was Bloomberg Philanthropies.
Yeah.
And
They
Goldman
cushioned
Sachs
them.
pulled out before they lost much money at all.
Yeah.
And I think the problem with, first of all, there's easier ways for government to get their hand on capital to fund these programs if they don't have the money currently. And the success metrics are a problem because I think SIBs were supposed to bring better outcomes-oriented programs. We want results for the money we're investing. But the problem is when you're tying a financial return to a success metric, it de-incentivizes comprehensive evaluation because the more analytics, the more metrics you bring into it, the riskier it becomes for the investor. And they shy away from that,
And
understandably.
the fact is, if enough of these bonds failed, investors would say, 8% isn't enough. I need 30%. The risk is determined by the success rate of the ones that are out there. So that's why the ones that are being financed are pretty much the safest you can imagine. So in that early childhood one that's featured so well in the documentary, they basically get a payout over 18 years. But nobody knows what's happening to other kids who aren't in that program. Do they get similar results? What happens after this program ends? Do they continue these programs? I mean, Pritzker's now the governor. He could implement these policies statewide if he wanted to. He could have access, as I pointed out, to the kind of financing the Board of Education in Chicago gets. It's a lot cheaper, and you can design comprehensive programs without worrying about the return to investors who really only want the return. Yes, they're socially responsible, but if you tell them you'll lose money with this social responsibility, they'll say, well, I'm not that socially
responsible. Do you have any, you interviewed the governor?
I did, yes.
Do you have any sense about whether or not he would like to see this
Well,
really bloom
it's
now?
very interesting because he ran on a program of a progressive tax. They've had a flat tax in Illinois now for many years, and also universal childcare. Universal daycare, so preschool. So he did run on that platform. Whether he actually implements it, we'll see, and also how he funds it, he didn't speak about. So at the moment, he's delayed introducing his new tax program, but apparently it's in development. And definitely Rahm Emanuel, who is still mayor, I think.
Of Chicago.
Yes, probably until the fall. He said he's not going to run again. He's pushing hard to try and get that funding for schools. So we'll see if it happens.
Indeed. Can we show another excerpt of the documentary?
Please.
You don't mind if we do that, do you? I think, now, if I got this right, is this Mainstay? This is the social worker from Mainstay, I think. Is that right, Meredith? Okay. Who will, well, why don't we let her speak for herself, if you would. The clip, please.
I think the private sector has things to teach social services. We need to be able to demonstrate concretely through rigor and measurement and indicators what the impact of the service is so that government will continue to invest in it. Government is looking to social impact bonds to validate for them their investment in these big social problems.
Now, Ricardo, that's interesting. That's a woman who's a social worker in Toronto in the social housing space who says that we in the public sector have something to learn from those people in the private sector who want to bring these new instruments to bear. Does that make you pause in your opinion of all this?
One thing that governments can learn about from the private sector is measurement. It's outcome-based delivery of programs. But the government's already learning about this, and they are doing this internally already. One thing that I find interesting in this debate about social impact bonds is that it sort of assumes that there's no capacity in the public sector to deliver these things on their own. And I don't know where that assumption comes from.
Well, it comes from politicians not wanting to raise taxes or go further into debt. It's pretty simple.
And also it doesn't come from looking around, because if you take a step back, we have public health care, we have CCP, we have youth and child pharma care, right? In Toronto, we have an amazing network of parks and recreation centers, some of which are free in neighborhoods for low-income residents. We have great public libraries. So what tells folks that the public sector cannot deliver this, given the revenues, given the instruments to do it? Governments do evaluation too. Governments roll out programs gradually. Governments pilot programs, learn from them, improve, go back, and then deliver better services. So I don't understand. I don't understand where the notion that we can't do this within the public sector comes
Brian,
from.
do you want to help us out on that one? Where does the notion in the political world come from that given everything that is happening already on the public dime, we can't do more?
Well, certainly there's an ideological element to this. It's very strong. And although it would seem to come from the right, it comes from the middle as well. And again, it's we can't tell taxpayers we're going to be doing X amount of things because they're going to say, it's going to come out of my pocket and I can't afford it. But if you do this bond thing, then the payments are down the road. This taxpayer is not going to worry about it. Maybe their children will have to worry about it. In other words, they put off making huge investments by making these small investments, because all of these SIBs, as we've heard, are pretty small, and they're pretty narrow. So in the first one ever developed, which was the prison in Peterborough, England, and the whole thing was about reducing recidivism. Well, the lowest recidivism rates in the world are in Norway, where they have government programs, and they're instituted very carefully. This one prison in Peterborough had lower recidivism for a while, but after 3 years, the bonds basically disappeared because the national government changed policy. That can happen at any time with these things. So I guess my sense is that it started in England on an ideological basis. People who love the capital markets, people who believe in the invisible hand, which has been totally disproven over many years, said, well, let's develop this. Let's get access to this, tons of capital. I said there's trillions and trillions of dollars available. Let's tap that, but let's do it in a way that, say, the billionaires like Bill Gates are not doing it. Bill Gates says, we need to eradicate this. I will devote X amount of my fortune to doing that. These are investors who really want a return on their money and want to feel good about getting that return.
Can you blame the social impact bond for the Peterborough, England example? If the government changes, if policy changes, if the ensuing government is less enamored with this instrument than the previous government, is that a failure of the bond, or is that just something else?
It's not a failure of the bond, but as I said, most of these bonds are designed for wealthy countries to do things that governments don't want to do in those countries. You're just not going to see this bond in the Congo. It's just not going to happen. Nobody's going to say, well, if we bring down recidivism in these prisons by 6 or 8%, that's a big deal. In a developed economy, if you have a high prison population, you want to reduce your costs. So then the government says, well, if I can reduce the cost of keeping people in prison, that makes this a valuable instrument. But if the investors, as in the Rikers Island example, don't get their money back, and most of them do, at least get them back. They may not make any money, but they'll get their money back. then it's not going to work.
Go ahead, Nadine.
I just wanted to add that there is actually a lot of investment now going into developing countries, and they're basing them all around basic needs, so essential needs, education, health, food, housing, and they're basing it on the UN Sustainable Development Goals. But a lot of that money is being funded by governments and development programs in the developing world.
And
As
run,
opposed
and
to
run
social
by
impact.
international agencies more than by local governments.
So
That's
not by
right.
social
That's
impact
right.
bonds.
Yes, social impact bonds. Yeah.
Those two.
Yes.
Because one of the things I wanted to follow up, having watched your
They call
documentary.
them development impact bonds. but-
Okay. Having watched your documentary and learned a lot and really enjoyed it, so thank you
you.
for doing it. One of the things I wanted to follow up on was the target in society for many of these social impact bonds. I guess the original thought was we can help the hardest to help. Are they in fact the target for many of these social impact bonds? Or is it not quite the hardest to help because you want to have a positive outcome at the end of the day, and you'll more likely have a positive outcome if you're dealing with the not quite as hardest to help as opposed to the most difficult cases?
Yeah, so the idea of creaming and parking, they call it.
Creaming and parking.
Yeah.
Okay, there we go.
So you want to
That was
take
the technology.
the people that are most likely to succeed. I mean, that's one of the biggest criticisms of social impact bonds, and you do see that it was in the Peterborough SIB because in order to get into that program, which was meant to stop repeat offenders, so men who were going to prison 4 or 5 times a year on short-term sentences. But in order to get into the program, you had to really want to have access to the program. You had to express that interest. Whereas government, when they're dealing with these populations, you don't always have people who want to change. But as government, you have to help them regardless. So I don't think the idea of social impact bonds was to help the hardest to serve. But ultimately, that's what government has to do.
But here's an irony, Ricardo. The Ontario government, the new Ontario government, has shut down the social impact bonds that the previous Liberal government was developing. You agree with that decision, I bet, don't you?
I agree with the decision of investing in social services in a way that makes more financial sense. So if they were to shut down the program and fund the programs through the public sector in a different way, using either new revenues or, if need be, borrowed money at lower costs, that maybe could be a good idea. But unfortunately, I don't think that that's what's going to happen.
In your view, Brian, is the verdict in on these things yet?
No, I don't think it is. I think we're going to see a lot more of these bonds, and we need to see how they play out over time because, as we mentioned, some of these are 10, 18, 20-year projects. And we need to see whether it makes a difference in attitudes of governments. And if government looks at a successful program and says, we should try this elsewhere, then that can be successful. But if they just say, well, that's my social commitment in my term of office, I don't have to worry about it anymore, then it's a problem.
Andrew, we've got about a minute left here. Do you think the verdict is in yet on these
So I
things?
don't think the verdict is in yet. What I think is, we should take a diversified approach to both financial instruments and to how we solve our social problems. And this is one example. I agree with you. It probably doesn't help the most marginalized. Government is better at that. But I think it's evolving. I mean, how many years, how many thousands or several thousand years or 1,000 years have we had bonds or some equivalent of bonds? This is a new instrument and it's being refined, and I don't think the verdict's in yet.
Okay, shall we go? That's what I was looking for, a nice wide shot, so I can thank everybody for coming on the program tonight. And just before we go, we want to remind everybody what you want us all to know, right? Yeah, here we go. A reminder, right after this program, you can catch the world broadcast premiere of Nadine's documentary, The Invisible Heart. You can also watch it at your leisure on our website at tvo.org, and you can hear an interview with Nadine on TVO's On Docs podcast, all about documentaries, and you can find that at tvo.org/ondocs.
The Agenda with Steve Bacon is brought to you by the Chartered Professional Accountants of Ontario, helping businesses stay on the right side of change with strategic thinking, insightful decisions, and business leadership. Are you on the right side of change? Ask an Ontario CPA.